What does that have to do with today, you might ask? Well, just like the banks of 2023 had significant amount of money locked up in low-yield treasuries, which have plummeted in value, today the banks have their money tied up in another asset that's also not doing that well, and that would be commercial real estate. See, during a time when treasuries were paying you next to nothing and bank deposits barely paid you 1% if you were lucky, commercial real estate was booming because you could take a loan for 1 to 2% and go and buy a property that makes 3 to 5%. However, now that interest rates have increased, there is a problem. Commercial real estate values are plummeting, with Morgan Stanley previously having estimated that this segment of the market could decline by as much as 40%, which is the same magnitude as we saw during the 2008 financial crisis. Why is this such a bad deal for banks? Well, as CNN previously explained, US banks hold about $2.7 trillion in commercial real estate loans, and about 80% of that is held by smaller regional banks, the ones the US government has not classified as too big to fail. As an example of this, just imagine that we have a $1 million building that makes $60,000 a year, which is a 6% return. If interest rates then decline to 1%, that building could sell for $1.5 million, or a 4% return, since you could borrow at 1% to make 3%. But if interest rates spike to 6%, that building could only be worth $666,000, or a 9% return, since you'd now have to borrow at a higher interest rate to make the same 3% profit. So why is this math creating a banking panic?